And last week, I already shared with you the top accuracy candlestick patterns for gold, USD, and Forex trading. And now in today's lesson, I will share with you the checklist. That every scabbers that you need to remember before you start any trading. All right, the professional candlestick blueprint is our next lesson today. And let me change the color of the letter. All right, and the meaning and the source. The source of today's lessons is that inspired by Bukowski's chart patterns and Nixon's Japanese candlestick charting. And in trading, the difference between a gambler and a professional is the checklist. All right, and now I will share with you the Thomas Bukowski dedicated chapter 10 of his work to this exact topic. And his philosophy is simple. You cannot write down the reason for trade. You shouldn't be in it. So that's why in today's live stream, I would like to organize the lesson regarding to the checklist. And it will help you when you want to improve your trading skills. I believe so. And the first part of today's lessons is I would like to share with you the philosophy of professional trading. Most retail traders fail because they see a hammer, all right, and treat it as a buy signal, right? Like in the pattern, the candlestick pattern I usually share with you, that the hammer. But in the VIP Nova community, we treat a candlestick as a letter of intent. It tells us what the market wants to do, but we only enter when the market proves it. That's why I always remind you to wait for the confirmation candle appears after any pattern appears on your trading chart. All right. And the next part, I will review it kind of quickly for the part that is kind of short for our today lesson. And the next one is the core strategy. And we will discuss about the context and identification. Regarding to the power of context, that is established or invented by Nissen's rule. A signal is only as strong as the level it sits on. We only trade candles that appears at value zones. Okay, remember for this. We only trade candles that appears at the value zone. First point. So what are the major value zones or major zone? The first one is a major support or resistance, of course, and that's why I always have the broader view. In a bigger time frame from daily D1 to H4, right, and go back into 1 hour, right, and minutes time frame to identify the major support and resistance. Okay, the horizontal levels where price has reacted at least twice. All right, at least twice. So that is concerned a major support and resistance. And for the bigger time frame, like daily or hours, we can rely on the support and resistance because that is in a big time frame and it need a lot of times to establish for the key level. So it's become more reliable than the support or resistance zone in a smaller time frame. All right. And the next one is about the dynamic support. I want to talk about the dynamic support. Let's use 89-day or 200-day EMA. So that is concerned a dynamic support. And you know that my favorite indicators that I usually use to establish the strategy is EMA, right? I always show this on my chart when I live stream on YouTube. Okay, so if you want to identify a reliable dynamic support, you can adjust the indicators like EMA, and EMA 89 or EMA 200 is a reliable dynamic support zone. And the next one is about Fibonacci levels. Yeah, it can be also confirmed, concerned as the value zones that we need to pay attention to our real trading chart, especially the, the zone of 0.5 and 0.618 retracement zone. So those are reliable, the key level, okay, the key zones that you need to observe. Okay, so then let's move to the next issue. And now I will introduce to you the high probability recognition that's related to Bukowski stats. Yeah. And remember this, remember this slogan. Don't trade every candle. Focus on the big three. This is the slogan that you need to remember if you want to expand, yeah, increase your winning volume. Don't trade every candle, okay? Focus on the big three. So, what is the big three? Yeah, let's remind our lesson a bit. Big three. And according to his opinion, the big three he's want to introduce to us is bullish and bearish engulfing. Yeah, as you can see on the real chart, engulfing candlestick really, yeah, happen many times, right? Happen many times on your real chart, especially gold USD. There's a lot of engulfing candles, right? For both bullish and bearish candle. So that is one of the big three. Yeah, candlestick pattern that Bukowski want to mention in the checklist. Yeah, one of the content of today's checklist. It will show a total takeover by the opposing force. All right, for the meaning of the bullish or bearish engulfing, it shows a total takeover by the opposing forces. And the next one, and the next victory is the hammer or the shooting star. Okay, hammer or shooting star. This is also a common candlestick pattern that usually appear on your real trading chart. All right, especially if those are single candlestick pattern, you need to identify it in a bigger time frame, like daily or 4 hours, to increase the reliable and it's trustworthy. Okay, and it's very dangerous and easily noisy, right? Have a have a lot of noise if you identified it in a smaller time frame, especially like 1 minute or 5 minutes. Okay. So my advice for you for single candlestick pattern, you need to looking for them in a bigger time frame. All right. Hammer or shooting star. And the next. Okay, so let me give you additional idea for hammer or shooting star. Its meaning, its meaning is showing a failed attempt to push the price further, resulting in a sharp rejection. All right. resulting in a sharp rejection. And the last victory, that Bukowski mentioned in chapter 10 is morning or evening star. This is a three candle and cluster that represents a complete V-turn, right? V-turn in sentiment. So this is the meaning of morning and evening star. And this is the photo. Okay, I want to share with you the photos of the patterns that I just shared with you. Yeah, just remind once again, okay, review our previous lesson because it's easily to forget it. All right. This is the, as you can see that this is these are 9 candlestick pattern that usually appears on your real trading chart. And Maribozu is the boldest. Yeah, it's the boldest one. Very powerful boldest engulfing pattern. All right. For engulfing, it's established like this shape. And for the hammer, all right, this is uh the boldest candlestick patterns. Okay, so these are 9 patterns for the boldest candlestick pattern. Yeah, boldest reversal. We have 3 white soldier as well. All right, and piercing pattern. And the next one, boldest harami. Okay, but the victory that Bolkowski want to emphasize and remind all of us about its power and the common, it's the boldest or barest engulfing hammer or shooting star and morning or evening star. Okay, so he separated into double candlestick pattern, and this is the yeah 3 candlestick pattern. All right. All right, and now let's move to the next part because we already reviewed those candlestick pattern, for the last lesson. And the next part is the execution, the Bukowski chapter 10, like the measure rule. To be a professional trader, you must have a mathematical target. And the target, take profit, calculating the high of the candlestick pattern, high to low, and that high to the breakout point. Okay, and that high to the breakout point. And for the VIP strategy, the tax profit is at least 1/1. Okay, 1 to 1, based on the risk reward ratio. All right, and most of the signal. Yeah, the biggest take profits at 80% of that height. And don't be greedy. Let the market have the last 20. And for the confirmation, to set the target, never enter inside. Yeah, never enter inside the signal candle. Wait for the next candle to close above the signal candle highs. This is the filter of the fake gulfs. All right, so we need to remember for this sentence, never enter inside the signal candle, which means we need to wait for the pattern finally, completely to establish on the real trading chart because it's just a signal. Every pattern is just a signal. It's not a confirmation for you to enter the trade right now. All right, remember, anything important, I will keep on repeat and repeat. Yeah, keep on repeating and repeating, okay? Never enter inside the signal candle. Let's wait the next candle to close above the signal candle's high. Because for the bullish, okay, for the bullish reversal. Let's wait for the next candle. Close above. All right, close above. And for the bearish reversal, you can wait for the next candle. Close below. All right, close below. Candle low. All right. So this is the opposite reversal signal. And just remember, you need to remember this key point, okay, key point, that it will help you avoid the risk or losing trade. Why do I mention that? Why do I mention that? Because the market always trapping us. All right, it's always trapping us, especially when the market's moving in a high volatility and when the news release. When the news release. Okay, so let's go to the smaller time frame to have the example for this situation. All right, like yesterday, New York session. Yeah, yesterday New York session, when the price, yeah, heading to 43.74. Let's go to the smaller time frame to see the detailed movement of the market yesterday, New York session. All right, you can see that it's formed a consecutive bullish candlestick, right? However, after that, it appear a strong bearish candle, right? Strong bearish candle. And if you confirm this is a three white soldier, right? Three white soldier candlestick pattern, you can win. You can win for the next one. However, the next move of the market will got your rejection immediately when it gets to 43.73. All right. And why? Why was it? Why was it? Because if we're looking at in the broader time frame, yeah, it's moved near to the previous resistance zone. This is the previous peak, right? And it's got three time rejection of the market. And this is not the exception. Now, yesterday, New York session is not the exception. It cannot break out from that peak strongly, okay, to establish a new peak. However, it have immediately bearish reaction because that is the uh temptation of the big players. They want the market have the have a short-term bearish momentum. Okay, so that's why stop loss is our shield. It's our shield to protect it a part of the capital. And if you enter buy signal, to when you see when you FOMO to a strong bullish momentum, that's it. That's the market will kill you immediately. Okay, you can say that it dropped drastically, nearly nearly $50 decrease. Okay, for just a few seconds, a few minutes, around 30 minutes. Yeah, wash away $50 real price yesterday. And so That's why we need to have the confirmation candle appears on a trading chart and always set stop loss. Okay? Because trading, any strategy, any analysis, it's just about the probability. Yeah, probability. We can win. We can remain the winning if we have the correct strategy. Yeah, by the knowledge we learn. However, however, to avoid the unexpected event and the trap from the market, let's set the stop loss for on the trade, on the signal you are in. All right, we cannot make sure 100% that the knowledge, yeah, the pattern, the knowledge that we have learned is accuracy 100%. All right, so I would like to remind you once again for the importance of the stop loss when we have when we enter any trade and yeah have the have even though that we have the correct strategy, however the market want to trap and sweep on the stop loss like we usually call stop loss hunting. All right, because they know that is where you set the stop loss and that is where many traders did it. All right, so just hunting for the stop loss by the big players that they will increase their profit. However, it will cause the damage to our live trading account, right? So do not FOMO and let's wait for the confirmation. Yeah, let's wait for confirmation after the pattern finally established on a real trading chart. All right. There's two key points you need to remember. All right. And the next part, besides of the take profit, now I want to share with you, the most important part of today's lesson is the professional checklist. All right, here's the checklist that you want to improve your trading skill. You need to remember, and you can copy. Yeah, you can copy it. Anyone want to receive today data? Yeah, today data. I will share with you the link. Okay, so that you can copy and keep in mind. Practice every day because this is the common question, very important question that you want to that you need to remember before you decide to enter any signal that established based on your analysis. Hang on a second, I will take the photo, this one, and share it with you. All right, the first one, we will go step by step to explain each step, okay? And the first thing for the market context, you need to identify the trend, right? Very important to trade with the trend. Don't go against the trend. In case the market's moving sideways, that is the story when it's moving sideways. All right, like this time. However, we can gradually identify the trend by using the signal of the swing high and swing low. If you see, it forms a gradual lower lows, higher lows, and higher highs. Yeah, like this. In a 15-minute time frame, you can see the candlestick of a gold USD chart is forming a higher low, right? Higher low. However, It's just the recent candle. Recent candles. It's just moving on 3 EMA ribbons. However, this is the signal. Yeah, when it's forming the higher lows at the moment, it shows you, yeah, the gradually recover of Gold Tuesday market. Yeah, from today Asian session until now, until now. Okay. And that is the first thing you need to identify the trend, the market trend, to choose the correct direction when you decide, yeah, to follow any buy or sell signal. Or you can watch in the bigger time frame like daily for weekly trading plan. Okay. And for daily trading, you can watch the main trend in a 1 hour chart, yeah, 1 hour time frame. Okay, so now this is the time for the bullish momentum. Yeah, and it's also created a trend line, the uptrend. Yeah, in the short term. So identify the trend by using the bigger time frame or by watching the bigger time frame. You can answer this question. What is prevailing primary trend? Up or down or sideways? All right. So there are two ways for you to identify the trend. I would like to repeat once again. The first one is you need to remember the what is the uptrend, right? It's forming a higher high and higher lows. That is called the uptrend. And when the market's forming a lower low and lower high, like this, that is the downtrend. All right. And when this move irregularly, like this one up and down, up and down. Yeah, this is when the market's moving sideways. All right. So remember for this shape, yeah, this movement, so that you can watch this in a bigger time frame, like 1 hour, to establish your to answer for this question. Okay, what is prevailing primary trend? Okay, and the next thing of the market context is the pattern location. And the question you need to answer is the candle at a support or resistance or MA line. All right. So you need to remember the location because it's very important for for the for the bullish candlestick pattern or bearish candlestick pattern. It will appear at the key support or resistance level. Okay. So we need to answer to find out the pattern locations to identify that pattern appears is correct or not. Yeah, is correct or not. All right. If the bullish engulfing appears at the resistance, it will not effective. Yeah, it will not effective. It must be appears at the support zone after downtrend. That's what we call the bullish engulfing. All right. In case it appears at the resistance zone, it's not a bullish engulfing. All right. So identify the pattern location. Yeah, pattern location is very important to improve. Yeah, to increase its accuracy when we trade. Yeah, when we establish the strategy. All right. So remember for two questions relating to the market context. Okay. And the next part of the checklist is the signal identification. Yeah, signal identification. And there are three questions. Yeah, you can read here. The first one is relating to the pattern recognition. Does it strictly fit the criteria like hammer or engulfing or star, morning star, evening stars? Yeah. So that's why we need to wait for the for the pattern finally established on our trading chart. For example, like this one, this is we can find it as the morning star, right? Morning star. This tree candle appears at the morning star. Support zone. Why we can see it as the support zone? Because it continue to have the bullish reaction when it touched to 42.73, right? 42.73 to 42.74. All right. So that's why we call it a support zone. And it's after a downtrend, yeah, a short downtrend. And this was a confirmation candle for this bullish, yeah, bullish candlestick pattern. All right. So find and wait for the pattern finally completed to establish on the real trading chart. Yeah, I would like to repeat again. For this, signal identification is the super important thing that you need to remember for this keyword. Yeah, these tips, trading tips. And the next one is confirmation. Of course, confirmation. That's the price close above or below the confirmation point. Confirmation point is here. Here can be a breakout level or breakdown level, or it can be also a bullish or engulfing powerful candlestick pattern or not. Okay, confirmation point is usually a breakout or breakdown area. All right, price level. And if you want to increase the accuracy of this signal, yeah, signal identification, you need to check the volume as well. For me, that I do not prefer to check the volume yet because the price action tell you everything for the market story, yeah, market meaning. And if you want to make sure increase your winning rate, volume check is one of the most thing that you need to concern when you do the signal identification. All right, and the question is the volume on the signal candles higher than the average. All right. So if you see and you can uh, answer for this question, it will help you to increase your winning rate. Yeah, when you practice to establish your signal by using your own strategy. And the next part of the checklist is trade setup. All right, this is where we set stop loss, take profit, and risk reward ratio. All right, risk reward ratio. The stop loss I usually share with you that's placed below the low or above the high. All right, and for the take profits, you can calculate via measuring rule like pattern high, multi to 80%. Yeah, multi to 80%. For example, like this one, the take profit. Yeah, continue to the example of this morning star pattern. Let's see. You enter for the long position, right? For the buy signal, choose the long position tool on the trading view. And The open price of the next candle of this candle will be our entry. All right. Enter for this. And the stop loss you set below the low of the Morningstar pattern. And for the take profit, you can count on the previous resistance zone. All right, count on the previous resistance zone. That is the first take profit. All right, and the second one, is 80% of the high of the previous momentum, yeah, previous wave, bearish wave, because you can see that it's forming a continuous bearish candlestick pattern, right? Bearish candlesticks. So this forming a fair value gap as well. And like I usually share with you, the markets always tend to fill the fair value gap. Yeah, but we don't know when. All right. But this is already tell you Morningstar pattern indicate for the upcoming bullish reversal. All right. And when we see a strong Marubozu, bullish Marubozu established on a real trading chart, this is another confirmation for you that is the strong bullish momentum will occur and fill above fair value gap. All right, fill above fair value gap. And you can see that obviously it did, right? It did. And after it did the mission, yeah, just like the mission that the market won the candlestick to complete, right? It filled the fair value gap from this area, imbalance from the buyer and sellers. And then it's having the retracement. Yeah, retracement. Like, oh, they use a lot of energy. Yeah, a lot of power. So now it's getting weaker and need to accumulate, right? So that's why the price retraces in the short term. However, if you see the next movement of this wave, it didn't hit the stop loss we placed above the low of the Morningstar pattern. All right. So that's why when we see the bullish candlestick pattern, yeah, bullish reversal pattern like Morningstar, and the confirmation candle is a Marubozu. So this is the two confirmation, yeah, double kill for the bearers, for the sellers. That okay, this time for the bullets, for the buyers dominating the game, and we need to do the mission. We feel this favorable gap above here. All right, so we can confidently set the second take profit or hold our trade to the next profit. Yeah, up to the higher level is around 43.34. 43.34. Okay, and then when the price heading up, and you can move the stop loss higher, move it to the break even or to the plus level, like plus 50 pips or 100 pips. That depends to your decision. All right, and you can say now, obviously that the price is still heading very strong. Yeah, and higher than the entry at 42.90, 93, 93, right? So this is the example. Yeah, it's an example for you when we see the correct pattern appears in a correct location. And we have another very strong confirmation from this Marubozu. And another confirmation, uh, another condition is that fair value gap above here. Okay, so anyone want to do the swing trading by using the 1 hour time frame to do analysis? This is the golden time. Yeah, golden time for us because there's a lot of conditions that support for the buyers actually. Okay, so I hope you understand for this example about the trade setup where we can identify the market context, the signal identification, and trade setup. Okay, and the last thing of The checklist is relating to your psychology and discipline. All right, last but not least. Yeah, last but not least, because we trade according to 1 hour. Yeah, 1 hour time frame. And if you're still looking at the smaller one, the smaller time frame, and you your mindset is not stable. Yeah, you are easily too distracted by the smaller time frame. Yeah, by the movement of the gold market in the smaller time frame. And you cannot keep the take profit as you set on a 1 hour. And you can also receive the stressful by setting stop loss. Yeah, very far because because the stop loss when we trade for this patterns is up to, let me calculate it. We have the entry at 42.94 and the stop loss at 72. So it is up to $22, which means 220 pips for stop loss. That is so big, right? But this is the swing trade. Yeah, we trade in a big time frame, like 1 hour. We need to accept that in the beginning we set up the signal. All right. So we cannot follow the discipline and keep our trading psychology stable. It easily make you lost, even though our strategy is correct. All right, and this is the two question you need to remember and yeah, to answer it. Okay, answer it. Okay, so I will let you some time to take a look for this checklist once again. Anyone need this for your trading strategy? I can send you the link of today's document. All right. And let's move to the next part. Yeah, it's also the near to the last part of today's lesson. Yeah, today's lesson is mostly about the checklist and like this one I just shared with you. Okay. And now is the advanced lesson. Advanced part of today's lesson is the concept of the busted pattern. Yeah, like I just shared with you, not any strategy by using the knowledge that we have learned from the trading, from the video, all traders confirm for the accuracy, but it's not always happened 100% winning all the time. And that's why we need to have another view for the busted pattern. Yeah, busted pattern. That is when the market is getting manipulated. All right. Actually, that is always happened, especially in the session or the time that the market's lack of liquidity. Okay, lack of liquidity. So for the busted pattern, we need to find a way to handle, to handle with this. Stop loss is the part of the game. We cannot deny it. Okay, so the only thing I can share with you is finding the solution. Yeah, finding the solution to solve the busted pattern. If you enter a bullish hammer and the price breaks below the bottom of that hammer, the pattern is busted. All right, the pattern is busted. Like the example. Okay, the example when it touched to a previous peak. Okay, so let me find another example for you to describe for this theory, busted pattern. Okay, this is the correct one for the bullish engulfing pattern. And this is the signal to show you that it's got the rejection when it touched to 42.83, 48 level. Okay. Busted pattern, bullish or bullish hammer. Okay, so now let's find hammer on your chart. Okay, so this is the shape of the hammer, right? And this is the bullish reversal signal. So let's find any hammer that after a appear in front of the bearish downtrend. Those are bin bar actually. All right, so after a while observing the chart and looking at for the busted hammer, so I can consider this one. But actually it appears at the resistance zone, and this is the greystone, greystone hammer actually. A greystone pattern actually. And this one is the correct hammer on a 1 hour chart because it's appear at the support zone after uptrend, after a downtrend, and indicate for the upcoming uptrend. All right. However, it easily sweep the stop loss when we set the stop loss below the low of the hammer, and this time it's nearly hit the stop loss, right, for this candlestick before it's heading to a higher level. So set the stop loss is also, how to say, it's easily risky as well. Yeah, when we set kind of near to the low of the pattern. And this is also another correct hammer. Yeah, correct hammer. All right, here we have. Yeah, you can see this period. We can take a look for this one as first. After a downtrend, like this one, downtrend, right? It's formed a hammer. After that, hammer, always hammer. However, yeah, the next candle was confirmed by a bearish one. So this is a false hammer pattern. False hammer pattern. And you can see that it's dropping down 48, right? Even though that it's from a hammer after a downtrend, after a short-term downtrend. But it's not successful to have the bullish one because the next candle appears after it is the bearish candle, All right, is the bearish candle. So that's why waiting for the confirmation. Yeah, the next candle confirmation is very important. And yeah, instead breakouts in the opposite direction is where. So this is the false signal. In case we enter for the entry, we enter the trade as at the first entry, and when it stops, when the next candle stop or officially established on the chart, and this is not a bullish candle. This is the bearish instead. How we can do it? How we can solve this situation? According to Bukowski, the busted pattern isn't just a losing trade. It is one of the strongest trading signals available because it represents a massive trap for wrong side of the market. Okay, and it hit the stop loss, right? It hits the stop loss because you set lower than the low of the hammer, and panic selling as well, because yeah, it show you that the buyers um get the buyers got beaten by the sellers, right? And traders who see the fall reversal immediately start selling. And the result here, the violent fast downward move triggered by the momentum of trapped buyers. And this is the four step. I will instruct you four step to improve, to solve this problem. The first one, recognition. Identify the pattern. Identify the pattern, right? Always to do it, even though it's the busted one. And step two, initial trade. Place the buy order with a stop loss below the pattern. Now we do it as normal. And step three, the break. If the price closes below that stop loss, do not make excuse, except that pattern is busted. All right. So this is above two steps is for the normal condition, right? But for the next step, when we realize that this is the busted one, accept it and do not make excuse. Yeah, this is the thing that we need to keep our mind calm, our trading psychology calm, and move to the step four. That is the flip. Yeah, the flip. Immediately enter a sell order in the direction of the breakout or breakdown. Okay, the target is usually equal to the high of preceding fell rally. All right. So when you realize that you are wrong, the only thing that you need to reverse, yeah, you need to reverse like the way the market reverse. All right. So if you hit the stop loss, immediately sell because they follow the sell signal. They follow the sellers. They do not support for the buyers anymore. And if you sell, you can have victory because price heading to 41.49, right? 41.49. And it's also a significant profit as well. Okay, so for this busted pattern, yes, the solution for the busted pattern, you need to be calm. First, calm down. All right, hit the stop loss. That's fine. We will follow the new direction of the market. Reverse. Okay, reverse to the correct direction that the market chose. All right, because that's the busted pattern. Do not be stubborn to your previous analysis anymore. All right. Remember for the flip. Yeah, immediately enter sell order in the direction of the breakout. Okay, so obviously that you will have the recover quickly when it's heading down to 41.49. In case, in case that you are unlucky because the market keep on sweep the stop loss continuously. That is when you realize that, oh, right now the market is manipulated. We should stop trading, take a rest for 1 to 2 hours, or even tomorrow you come back to trade, or even next week you come back, as long as you are calm. Okay, you are calm enough to trade again. And do not revenge the trade. Okay, do not revenge the trade all the time. I remind you for this issue. Never, never revenge the trade, revenge the market. Only you get hurt, not the market. Okay, and that's why when we see this busted pattern like this example, it hits the stop loss. Okay, so now it's bearish, right? I will follow the sellers. Enter the sell immediately. And remember, set the stop loss higher, higher than higher than the previous high. And and looking for the chart, or if not, you can set the automatic take profit. But it needs reasonable. Okay, it needs to reasonable. Follow the risk reward ratio, all right, or measure follow the 80% of the previous high, like this. Okay, like for example, like this wick, yeah, this lower wick of the previous candle. So everything got the solution. Okay, every problem will have the solution. The first thing you need to keep your mind calm. All right. So in case it keep on sweep your stop loss, that is when the market is manipulated and our stop loss are hunted. Yeah, are being hunted. So follow this four step. Especially remember the fourth. Yeah, the fourth step, the flip. That will help you to recover the signal immediately because the market changed its intention, right? Don't fall in love with the pattern. Yeah, don't fall in love with the pattern. If it works, we take the profit. If it's busted, we switch the signs and take profit from those who are stuck in Daniel. So that's the key takeaway for my VAB member when you join in today's lesson. Okay, don't fall in love with pattern. Anything has probability, and using the patterns, it just increased up to 80%, 80 to 90%. They still have 10% left. A mistake and a busted pattern might be happened. All right. So never fall in love with a pattern, which means don't be stubborn to the pattern you establish. You did the strategy by using it, by using that pattern. Okay? And instead of being frustrated, realize that the busted bullish move often leads to a fast and violent move lower. Professional traders often flip their position when a high probability pattern fails. Okay? And this is the final summary for today's topic. Yeah, you can take a look for this summary key points. Find a zone is the first thing you need to do. The next one is wait for the candle. And the next step, third step, wait for confirmation. Fourth step, check the math relating to risk reward ratio or beta. And the last one, execute and detach. All right. So this is the topic today, and I want to share with you this important checklist. All right. So, are there any questions you want to ask me right now? I will let you about 1 minute. Yeah, I will wait you about 1 minute. If you do not have any question, I would like to end our live stream. Yeah, our lesson then, because now it's about time and I need to prepare for the next live stream on YouTube as well. Yeah, and after that, we will focus on the VAB signal group. From yesterday, from yesterday until now, the market mainly is moving in a sideways market. Yeah, except for the yesterday surprising very strong bullish momentum. However, it touched to the previous peak and got the rejection immediately. All right. So this is also the key level that gold price need to conquer in the near future. So anyway, in a bigger time frame like daily or week, it's still moving sideways. Yeah, accumulation at the peak area. So come down. I believe that gold price will conquer the new all-time high. Yeah, near all-time high next year. All right, let's see for the next scenario of gold price. And if you want to find the exactly entry point, entry zone to maximize your profit, follow enough the signal in the VIB signal group. All right, follow enough because that is only the action that help you to increase increase the winning probability, the winning rate. Okay, so I didn't receive any questions, so I would like to end today's lesson. All right, thank you so much for joining my live stream, my lesson today. Thank you so much, and see you next time. Goodbye.